Good morning, my name's Jessica Amir with Bell Direct. Thanks for your company. Well, the Aussie share market is on for a cautious day of trade, but nevertheless has clawed back from its early losses after it fell 0.6% at the open, and about 11 a.m. it's tracking 0.2% lower. And it really comes as we had a very topsy-turvy evening and morning, which we'll touch on in just a sec. Despite that, there are plenty of green shoots today on the ASX, with almost half of the sectors in the black, including healthcare, utilities, banks, and also energy stocks. Now, three very important things occurred overnight. Firstly, the crude oil price collapsed on the back of weak demand because of COVID-19, and the oil price turned negative for the first time in history. Really, as the futures May delivery, WTI oil price fell over 100% to a negative $37.63 per barrel. Now, this means that oil producers are willing to pay traders to take oil off their hands, as they're simply running out of capacity and room to store oil. Now, this has never happened before. However, we are looking forward to the June oil price, which is trading at $20.43 a barrel, and that's a more accurate reflection of the reality of the oil price. And now, speaking of the oil price, that's also staging a bit of a clawback as well and starting to stabilize. Despite that, it remains at a record low. So what does this mean for you? Well, for us as consumers, expect to pay hopefully less at the bowser very soon. Oil prices or petrol prices could get to 50 to 85 cents a litre, fingers crossed. And for the ASX and global energy companies, not so good news for them. It means their earnings and profits will be squeezed, much of the same as Caltex reported a earnings drop yesterday. Now, secondly, Virgin Australia has entered into administration this morning after failing to secure funding to give it the necessary support it needs to navigate these uncertain times because of COVID-19. Virgin says the scheduled flights will continue to operate as normal, and the administrator plans to restructure and refinance the business and take it out of administration as soon as possible. That's a quote. However, what is important to note for those of you, including myself, that have frequent flyer points, it's important to note that is a separate company, and Velocity Frequent Flyer has not entered into administration. So for Virgin Australia, remember that they've got two significant shareholders, Singapore Airlines and Etihad. So I guess we'll have to wait and see if these two major airliners swoop on Virgin, given it's in distress. Now, thirdly, despite the oil price spill overnight, markets somewhat held up. European markets closed higher. The stock 600 rose 0.7%. However, overnight, the US, the benchmark index, the S&P 500, lost 1.8%. However, now US futures are suggesting a bit of a recovery when stocks reopen this evening. And lastly, also what happened overnight, well, the gold price fell a bit, but it's still held above $1,707 an ounce. And lastly, the Australian dollar also held its ground at 63.4 US. So what are traders and investors watching today? Well, on the economic front, two things. The RBA governor's speech. Philip Lowe is expected to speak about where the economy will go from here, and perhaps we won't see that V-shaped recovery that is expected. So we'll wait and see what type of recovery we can expect, or what letter of the alphabet the economy will recover in. And lastly, keep an eye out for the Australian Bureau of Statistics second coronavirus weekly update, this time on how employee wages have been affected. Now, what else are shareholders, investors and traders watching today? Well, the IGA owner of Metcash, the owner of IGA Metcash MTS, they've completed the $300 million capital raise. 95% of shares will be allotted to existing shareholders. Now, Metcash, this is a hold stock for Citi with a price target of $2.95. Its dividend yield this year is tipped to be 3.9%. Next year, their div yield expected to be 3.6%. Natural gas company APA Group today, they downgraded their earnings for the year. And lastly, Praemium PPS. This was reiterated as a buy stock by Bell Potter. after the software company reported $169 million in net fund flows for the March quarter, and this beat their expectations of $150 million. Meantime, funds under administration that actually fell below 4.6% below Bell Potter's estimate. So all in all, it is a buy stock for Bell Potter given its strong cash flow and rising sales. I'm Jessica Amir from Bell Direct. Stay safe and happy trading.